Okay, guys, welcome to another live trading clinic. My name is Steve Ruffley. Today we're going to focus on the Bank of England announcement. I know, again, a lot of people are expecting unchanged and to be a bit of a non-event, but as I've demonstrated in the past, there's always a lot of volatility after these rate announcements because we're in that cycle now. We're coming out of that growth cycle. We're coming out of that reliance on, job figures, GDP. All we're focused on now is interest rates, and not if they're going to go up, but when. Okay, we're following the US really right now, and Janet Yellen's poor attempt at forward guidance. But I think generally people are pretty much expecting a rate rise towards the end of the year or at the very latest early 2016. And as I said, it's not if rates are going to go up, it's when, and then it's for how long. We've kept interest rates artificially low for such a long time now. We don't really know what inflation should be. All we know is that wages and real wages and cost of living has not really kept up with any kind of real inflation measures. Oil, dropping so quickly and swiftly was just a smoke and mirrors. I mean, that's not really going to affect the man on the street. If you have to rely on, big cuts in your petrol bill to survive, then you're not really doing very well, are we? So the whole point is really what's going to happen when interest rates do go up in the US to the world money markets, to people individually, to businesses, just to the flow of money, just to everything really. I mean, I don't think people really understand how significant interest rates, even a quarter basis point rise, is for a global economy. And a lot of people have got comfortable again, comfortable with the amount of debt that they're personally holding. People in the UK especially measure the wealth on the house, and you've not paid your house off, guys. Listen, when interest rates could go up to 10% in the next 10 years, and all these people, they've over borrowed on the credit cards. That's just the tip of the iceberg. If you've got rental properties or you've got investment properties and you're running these mortgages, don't just because things have gone up for the last 10 years, things are cyclical. Look at gold. Gold was going up, now it's going down. If you treat houses like an investable commodity, then they're subject to market conditions. So they can go up, and yes, they can go down. So it's going to be interesting to see what happens when interest rates do go up, and they will go up, and what happens really to the global economy. So that's why these interest rate announcements, even in the UK, although we're expecting no change, there's something we should focus on and we look at. The pound's very, very strong right now. So if anything comes out and the Bank of England make any comments with regard to interest rates, to say that they might move more quickly than we think, or, they're certainly not going to move as quick as we think. There's an opportunity when the market are extended. But I'll go through the charts in a minute, and I'll show you, what's going on in the markets, and we can get a grip and an understanding of what can, potentially happen today. So before I start, as always, the risk warning. Remember that spread betting and CFD trading carry high level risk on capital. You can see your initial deposit. They may not be suitable for all investors, so please ensure you fully understand the risks involved. The information and comments provided here under no circumstances are considered or an offer to assist you to invest. Nothing interest you investment advice. The information believes to be accurate. The data is produced. Educational only. Content of the webinar is posted by the moderator on intro.com. The content is not constitute financial investment or tax advice. Trade.com does not accept any liability for the content that comes from during the session. So I'm going to go over some live charting analysis. So we'll go over some, important products today, which will mainly be the FTSE, I would say, and cable. Maybe have a quick look at the euro dollar. Multiple time frame trading, that's just understanding what's happened in the past to predict the future. Fundamental analysis, well, that's why we're trading right here, right now. The data that's going to come out in the next 27 minutes or so. I've always got my account open, so if there's any real money trades to be had, I will trade. I'm not here for the fun of it. And questions, guys, you need to ask me these questions. I've got my time here for the next 45 minutes, so ask me anything from a fundamental or technical standpoint, and get your money's worth. Get some questions that you want to know. So right now, we're looking at cable. So cable is particularly strong this morning. We've had the comments out from Greece that they're not going to pay back the IMF. They want some more favourable terms. And if anybody has listened to me on FX Street for any amount of time, it's not a matter of if Greece leave the euro, it's when. Okay, they've voted in this socialist government. They don't want to pay back the money. They've got no intentions of doing the amount of reforms that Germany and the wider EU want. So they will have to leave the European Union. It's as simple as that. Okay, it's not if, it is when. They cannot generate enough money. They cannot generate enough industry, and it's all Europe's fault. Okay, so it's Europe's fault, and that's why Varoufakis and the Greeks have been able to get away with what they have. Just basically, this huge game of chicken. The only reason they were allowed to get away with it is because they lied to get into the European Union about the finances, and the European Union knew this. So the whole reason is it's all built on, no foundation. So Greece borrowed the money, spent the money in infrastructure, everyone got rich quick, and then somebody has to pay it back. And it's all the next two or three generations that are saying, well, do you know what? I'm not down for that. I'm not down for another 10 years of austerity and living this way. So if it's a choice of going back to the drachma and understanding our own kind of economic path and controlling our own interest rates and currency, then yeah, I'm down with that. And then basically, oh, we're going to be a slave to Germany for the next 10 years. It's like, no, how's that ever going to work? It's not. So anyway, well, the reaction on the markets is that, demand for currencies that are non-euro has gone up. I mean, it's a bit strange because the euro is very high at the minute, and I don't really understand that. But we see from the get-go in the morning, we've seen this big, spike in the pound. And I've always said that, well, not always said, but I've said for the last few months, there's been some value in the pound. And if you look at the monthlies, really, when we're looking back of what the market's trying to achieve here, we've had this big, sell-off like we've had in the euro for, 7-8 months. But really, we've hit some good bottoms now, down at one spot 458. Really, for me, it's time to get back to some reasonable levels. And I would say that you could potentially look at a fib from the low to the high and say the 50% is a good target. So I would say that in the longer term view, one spot 587.97 could be good, but I'm looking more 164. I think by the end of the year, the pound is going to go up, and obviously, there's been a lot of dollar and a lot of speculation about the dollar because of interest rates, are going to go up first. But I think a lot of that's priced in now. So I think we've seen, the decline of the pound against the dollar while people have got, their fill of the dollar. But I think that's finished now. So I think, that this kind of bounce that we've had here and this very nice double bottom, just round about one spot 48088, I think really is signified that that's the end now. So we've got every opportunity in the short term to get back to the 50%, the 61.8 and the 100% of this monthly move. And, for the next kind of couple of years, I can see the pound really getting to, one spot 7. Because at the end of the day, we're going to have to raise interest rates ourselves. And we know, we've got Conservative government, the busy tinkering in the housing market and making all sorts of promises and freeing up social housing, all completely irrelevant things. But what they're going to have to do is tackle, this inequality between not even London and the south. Well, not even London, the south and the north anymore, but London and inner London. You've got people that just give up work in London at the minute because their house, is just making more money than they are. So people are just giving up work. You cannot have this situation. And the trouble is, what we don't understand is, what I understand and what the government understands are two different things. You have to remember the government, they lived and they grew up in a different generation. They're from privileged backgrounds anyway. So the real problems that face normal people are not affecting them. But the fact is that we're getting to this point where the older generation and this baby boomers, the people who have made all the money in property, are going to cash out of London and just go somewhere else. Okay, so there's going to be some sort of correction in the housing market. And yes, I've said this for a long time. And, it might take another year. It might take another 5 years. It might take another 10 years. But it will happen. I am always right. Always right. Okay? Spookily so. But as I've always said in trading, it's about being right at the right time, isn't it? If I'm saying it's going to happen now, it doesn't happen for 10 years, then that's 10 years of pain if you're trying to, short the housing market. The fact of the matter is that what goes up will come down. So what we're expecting now, I've just got a question coming through, what will happen if it's a cable of interest rates remain unchanged? Well, I mean, again, you're going to have to take a short, medium, long-term view. So your long-term view is unchanged. Then realistically, there'd be less demand for the pound and more demand for the dollar because as the market kind of weighs up, if the interest rate's going to go up quicker in the US, then you're going to get more bang for your buck, literally buying dollars than you are pounds. So unchanged, generally would see a decrease in the demand for the pound. But again, that's a monthly view. Weekly view, we've got, again, a couple of weeks of sell-off, but now we're rebounding strongly. So again, for me, still looks fairly bullish on the weekly, on the daily. Again, you can draw a nice trend line. Again, you have to make your technical analysis too complicated. But 1, 2, 3, 4 touches. It looks that we're eyeing up in the short term. This weekly level here at 1.58125, which ties in with the 50%. So for me, all guns, all guns are pointing towards a pound gaining strength in the short term. So if we look at the hourly chart. Again, you've seen these two, kind of really big spiking candles. A lot of demand for the pound and obviously some natural profit taking. So again, what we could see is maybe the market, if interest rates remain unchanged, which everyone expects, we get down more to the 50%. So maybe if we do get an unchanged reading in the next 20 minutes, then we get down to 153,726. But the trend is still up, so people will be dip buying these low points in the short term and expecting the pound to strengthen. So that's how you're looking at it. You're looking at the overall trend on the monthly. Green, weekly, green, daily, green. So the hourlies, you're looking for a low point for the market to come down and buy it back. Yeah, or again, you could think this overall initial spike in the morning will be completely retraced if you think the fundamental problems in Greece are a non-event. So realistically, we're just trying to figure out what value is. So right now, a lot of people are buying the pound, so it's strong. So there's profit taking towards the top of the range. So in the next 19 minutes or so, when we get the announcement, any comment, the market will move between these ranges, these levels, and we'll expect the market to kind of, if interest rates are going to stay low for a significant amount of time, we don't raise or think about raising until Q2, 3, 2016, then the pound will come down. If Mark Carney, Bank of England, make noises that maybe we'll look at raising interest rates when the US do, or we'll reassess it towards the end of 2015, might mean that we see demand for the pound. So these low points in the chart in the short term get bought back up, and we look to make new highs above where we've drawn our Fibonacci. So our basic lines are top, bottom, and 50% pivot. So that's where the action area is going to happen over the next half an hour or so between these levels. So euro, again, very strong at the minute. I don't really understand why, to be honest. I mean, maybe this is a big squeeze with a lot of people getting short with the worries of Greece and the institutions and central banks just pushing it up. Because, I mean, really, all we've seen is green candles, very few red candles. And the market is just continuing, this almost Elliott wave style pattern where we have the big, jump up. We don't get back into the range. So we've got this third wave. So we'll see some, probably markets getting back to these levels here at 1.12, and then the market will go on to make new highs. But monthly, you can see so many months of selling that, there's going to be naturally some speculation that the euro is going to have some value down here. Then weekly, the same, again, same formation as the pound. Big bottoms, and then the market with this very good reversal doji here, where the market has said, big sell-off, bottom of the range, no thanks, open up, go lower, then bang. The market is gone back higher. So daily, still looking relatively strong. Got some big levels here at 1.14, 642, which ties in with most of the, kind of the rest of the world. They can do technical analysis just as well as I can. You can see how it acted as support resistance here and here. So, a big level, and there's nothing above it. I don't think there's anything to really attract the euro to stay high in this region for very, very long. The Greece thing isn't going away. Then you've got all the problems if Greece does leave, the problems of contagion, the problem of other, member states renegotiating the debt. So I think that, we could see a push above this level for sure. And maybe one of these big, kind of weekly spikes where we get to about here at 1.16. And then really we just see nothing but selling for the weeks and months after. So euro has got no real right to be up here anyway. So I think this is a real institutional squeeze of people, just big banks, central banks, hedge funds getting the market squeezed out, and then when we get to these high points, the market collapses very, very quickly. So FTSE, again, bit of a sell-off again this morning based upon what we'd seen. Have a very, very nice trend line on the dailies that's been broken, which I was just, kind of looking at before. What I'd said to you guys, previously, is that really, look at the candle bodies. So every time we've rejected a close lower, the market's gone higher. So reject a close lower on the daily, the market's gone higher, lower, higher, lower, higher, lower, higher, blah, 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 blah. Again, as I've said a million times, break the trend line here, well inside, go up. But what we've actually done now, we break the trend line. We broke the trend line here. Yeah, but then we did the same. We opened up and then we went higher. But now we've topped out at these highs at 7064, and we've just started now to close below that trend line. One attempt, do the same thing, but we haven't. Then we've gone lower. Yeah, day, bit of a reversal type pattern on the daily. Now we're hitting lower. So really, the dailies for the first time in a long, long time are actually, looking like we drew a reversal. So again, just do your Fibonacci from the low to the high. So I'd say that realistically, we've got a really good chance over the next kind of few days and weeks of hitting 6625 spot 73 in the FTSE, because we take out the lows here at 68066, then we've got the fib an initial point as a target 38.2, then the lows here, then your 50%, and back into the ranges here. So I'd say for the first time in a long time, technically speaking, and with this fundamental news coming through, the weakness in the European Union, it looks like we could be seeing a bit of profit taking, and not just profit taking, but technical reversal of a bull trend. So again, look for these lows in the FTSE. What support resistance indicators do you use, Steve? Well, I mean, I use the standards, to be honest. I mean, you'll see Bollinger Bands. I always use Bollinger Bands. They're a good indication of overbought, oversold. RSI is good, and I have my own indicators as well. So, what I'll do is I'll go into a different view. Let me just put that back to the hourlies. So again, for that trend line, we can see that the market, from a technical perspective, is actually looking, a little bit weak. So, do look out for that. If we go into, the kind of more oscillator type scenario, again, I mean, I've got my indicators, which are my own indicators. So go to the DAX and the hourlies. Again, we're saying that, yeah, we've had this big sell-off here indicated by, the kind of buying and selling areas. But actually, we're looking to buy back at some point. So we've had a good bounce back with the buy signals here. But realistically, again, through the fundamentals and not getting back into the selling range, a lot of people that are buying here, on technical oscillators, could get squeezed out because, the fundamentals are driving the markets. And again, look at these trend lines that are drawn in. Okay, the market's broken through these trend lines, support has become resistance, and now the market and the DAX are heading lower. We're below the 50% pivot, we're below the 50% here. Again, the 50% trigger was a good sell this morning. So realistically for me, everyone that's technically buying the DAX, looking for value, and then bounces, haven't paid attention to the dailies. Okay, so the dailies are the same, right? We've seen these fibs here come into play, but what's really important is this trend line. So very much in the same vein as the FTSE. When we hit these low points, we bought back up. Okay, so here, buy back up, here, buy back up. But for the first time, we've broken through it. We haven't bought back up. So look, market's now looking lower. So big levels in the DAX, 11161, 10983. And again, if we start to break through so many people along the stock market, there's any kind of panic, the profit taking will be like something we've never seen, because people have just taken the free money and put it into the indices because, well, that's probably what the financial advisor told them to. But, you'll see a correction like we've never seen in history at some point, I think, because there'll be so many normal people that are along the stock market, so many institutions that are along the stock market. So when the profit taking comes and the selling inertia comes in, then these markets are going to get literally destroyed. I mean, literally. And I had this, not an argument, but some idiot that knows nothing about nothing was telling me that you can't have a flash crash anymore because you'll close the market. Okay, well, if the market starts to sell off and you close the market, what indication do you give to the market? The sellers out there. Well, the market is in real trouble. So, of course, people are going to sell it. And all you see is a gap, and the market is continuing to sell. So, yes, of course, we can have flash crashes. Of course, we can have any kind of, serious corrections. And remember, it's not a bad thing. People are so old-fashioned in the views. It's like, FTSE's down today, that's bad for pensions. Yeah, pensions are investing for 10, 15, 20, 30, 40, 50, 100 years. Okay, so when the markets naturally correct and come down, that's people taking money out of the markets, people that are long taking profit. It's not necessarily people losing. So remember, billions and billions and billions of pounds are traded on the markets every day. So when the markets move very quickly, that's generally as a result on the way down of people taking profits. It's not necessarily a bad thing for the world. It's natural. Things go up, things go down. People are so short-sighted when it comes to things they don't understand. And the markets, been around, for as long as people have. So they go up, they go down, but it's all relativity to time. So 10 minutes before the figure, guys. So, we're expecting 0.5 unchanged. We're seeing, the high points of the pound were coming down now. Nothing really technically. The grey here just indicates that, we're not overbought or oversold or particularly looking to buy and sell. The FTSE and the DAX and the SMI and the S&P are all at their relative technical low points. So could be an opportunity. We do aggressively sell off in the FTSE to lower levels like 6807. and maybe these levels down here at 6690 to buy a bounce. But again, it's all about timing, isn't it? If the market wants to sell off, then make sure, you use these levels as break and bounce. That might not be a bounce level, that might be a break level if we're heavily trending. So that's why I don't call them support and resistance. I call them break or bounce, because you have to put into effect what the market is thinking. Okay, so if the market is thinking sell, 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 and it sees a big level on the low side, then that might not be a point to buy, okay? Because the low point might be actually a target to break. So all these lines that you see in the charts, you have to understand what the market's trying to do. So the euro dollar, I don't understand why it's so high, to be honest. But if I was looking to sell it, I wouldn't sell this level here, this daily resistance point, because it's too close. Yeah, we've got too many people long here, too many people long here, and probably too many people long here for that to hold. So I'd expect it to bounce. So I'd look to sell the next level. Well, there we go. Our next levels are up here. So instead of, selling here for 14 ticks, maybe we sell another 80, 90 ticks up the range. Or even if you want, buy it. Buy a break of that because you know your next target. So it's all about understanding what the market is telling you that it wants to do. Okay? I don't understand why the euro is going up, but what does Steve Ruffley know? Okay? So if I don't understand why it's going up and I don't want to buy it, I want to sell it. But I don't want to sell it at the nearest point. I want to sell it at the furthest point, which is here, this area about 100 ticks away. And if it gets up into this area here, well, there's no levels. It's not going to get up to 1.18, is it? No way. So it can't. So what I'd like to see is quick spikes up here, getting all the short-term traders out, average into a position around here, take some pain, and then, within a few hours, maybe days, the market's trading back down here. Because the overall trend monthly is down. Weekly, okay? A little bit bullish from the bounce, but really the trend is still heavily down. Okay, we're nowhere near back into any buying territory for me. Daily, again, 3 strong days. We know our target here. So, again, we could break that very, very quickly. But really, for me, the higher time frames are telling me that the euro is a sell. So I will not be looking to buy it. I will be looking to sell high points. And that's higher time frame trading, guys. That's looking what's happened in the past to predict the future. And that's why, I'm not a big fan of Elliott wave, because Elliott wave, is a theory. And you don't know it's an Elliott wave until it's done the 5 points of an Elliott wave, but also, the ABC retracement. That's too long to wait. What I like to do, is pick any chart. I mean, let's look at something I never trade. I'll just bring the Aussie dollar up, actually. So I was looking at that before because we've seen that horrific trade balance come out overnight, and the Aussie's in trouble. It's been in trouble for a long time. Again, look at this chart. So I mean, just trying to figure out the past. Okay, so I don't know anything. You don't know anything to the right of this line, do you? Okay, I don't. So I'm going to take a point in history and try and see what will happen in the future. So for me, the up move in the Aussie started here, finished here. So 50%. Yeah, that's what I always look for. So in the monthlies, the 50% was the pivot. Bang. We got back to the 50%. We bounced. Didn't really kind of have any intention of making new highs. 38.2 support resistance, 50%. Perfect support resistance. 61.8 support resistance. So all that's telling me is that where it went, it doesn't want to go back to the highs. It's going to get to the lows. So the Aussie dollar has got another, 1,500 ticks on the low side. But it looks to me, technically, as it's going lower. So as you go through the weekly, same scenario. Yeah, look how these levels acted as support resistance. You tell me how good that 50% is. Yeah? If you're going to buy it, brilliant. You want to come back and sell it, brilliant. It gives you defined points of support and resistance. So you've basically got, they're beautiful. You've got 589, 1,000 tick ranges. So basically 500 points. Yeah, of areas of getting involved at the highs and lows, yeah, and being able to hold it, yeah, to exact profit points. So realistically, weeklies, again, reversal kind of, signal here. Dailies, yeah. Do you tell me, would you be buying or selling that Aussie dollar? With that negative trade balance that came in, hugely out of line. Let me just look back exactly what it was. We're expecting minus 2.250 million, and it came out 3.888 million for the trade balance in Australia. That is absolutely horrific in economic terms. Horrific. So all I can say is that when the American markets open up, the Aussie dollar is going to get destroyed. I'm surprised it's not further down than it is, to be honest. Obviously, I think what we've seen is an initial move overnight. Markets, again, got back up. But again, do your fibs, nice and easy. So 50%, okay, we're holding above it now, but once we start to hold below that 50%, then all these are your targets to get out. And then if you want to do a mini Fibonacci and a maxi Fibonacci, then just overlay it. So your overall 50%, is the break at the bottom. Okay, so your break at the bottom, your 50% pivot is going to be a close below that. Your real breaking point is going to be a close below that, and then maybe that you take some profit down here at the 61.8. So what I would say is, if you're looking for an Aussie short, get yourself short anywhere below the 100%, and you're looking for. So I mean, you've got a stop of 28 ticks to make a break of 40 ticks to maybe make a whole trade of 67 ticks. So that's the trade of the day. 30 tick stop. You break of the 50%, hold below it. You break of the 40, maybe get some profit out down here. So yeah, 23, 24. So yeah, maybe a 3-to-1 risk reward if you're going to be lucky. Maybe 2-to-1 if not. But really, you're risking 25, 28 ticks or so to make 60 or 70 ticks down here. So that's the trade. So yes, I mean you can find all that on the FX Street calendar. So again, FX Street calendar is what I use, to see the data, and it's very good. Again, my Rough Guide to Trading book does actually recommend the FX Street calendar. So this is all true. It's all things I use for my everyday trading. Anyway, right. So Bank of England, 0.5 expected 4 minutes. Expected unchanged, but what we're really looking for is any kind of comments coming out. So any comments from Carney, any comments from the Bank of England, anything that's going to contradict the view that interest rates are going to stay low for a long period of time. And if anything does contradict that, we've seen a little bit of selling towards the top of the range in the pound, but we could really see the pound get to these lower levels. So we've got other things as well. We've got the asset purchase facility, which is 375 billion. So that could be something else that people look at. If we cut that back, then that could be good news for the pound, could be good news for the FTSE. If we increase that for any reason, that could be something else the market takes into account. These things are very rarely unchanged, but as I said, if I think it's important, then you can guarantee every hedge fund manager and every serious trader in the world is looking at the Bank of England announcements. It's only idiots and people that know nothing about trading and nothing about the economy that think this is something that can be ignored. So just got 3 minutes now, guys. So we'll. I'm pretty sure the call will be unchanged, but let's keep one eye on that and one eye on the asset purchase facility, 375 billion expected today, and then let's keep one eye on the euro, dollar, the pound here. Maybe a look at gold. Gold's been very, very unpredictable lately, and the FTSE. Okay, so as I said, the FTSE's a buy for me, but maybe a little bit lower down the range. Okay, so just a couple of minutes now, guys. So make sure you've got an idea of what you want to do. Don't trade just for the sake of it, but it is an opportunity to see some market movement, and it won't be based upon the the unchanged. It will be based upon any comments that come out. So get ready now, guys. A couple of minutes. Keep on the hourly view just so we can keep a view of all the markets and what happens. So euro, again, still towards the top of the range. Pound, giving away all that profit taking. Maybe people are expecting this uptrend in the pound to continue. Okay, it's just under a minute now, guys. Ten seconds. Unchanged. 375,000 for the asset purchase pass, all in line. Okay, so everything's in line. So again, if everything's in line, maybe the trend continues. Maybe we could look to break the high here at 1.54397 in the pound. So everything's in line. Asset purchase in line. Zero point 0.5 is expected. Just listening for any kind of comments, anything that comes through. So I guess if everything's unchanged as expected, the trend from early on this morning should continue. So we'd look to make a high. We've got some good levels up here at 1.54783, or we might see some more profit taking based upon unchanged. Really, again, difficult, isn't it? It's difficult. What I would say is that probably this will be the institutions taking some profit, or some of the big boys putting some size through. But nothing really there moving the markets. DAX really towards the lower of the range still, looking quite negative for me, as I've said, and although the indicators are saying a buy, I think that kind of daily trend break is still, showing that we could have a big, move down before we do see any technical buying and any oscillator-based bounces. So euro still towards top of the range, not really doing a great deal. Pound, again, looking a little bit red now. Maybe some profit taking, maybe getting down to this level at 1.53619. But unchanged, everything's unchanged, status quo, I'm afraid. So not really a great deal to jump on the back of, though, I'm afraid. So any questions, guys? Any thoughts? What are your thoughts on the economy? What are your views on interest rates? Does anybody think that interest rates will go up in the UK this year? Has anybody got any particular views on the pound? Has anybody have any views on the euro? Does anybody have any thoughts at all on anything? God, I must have some of the usual suspects in here. We've got Pan on Fire. What do you think? Have we got we've got Ian. What do you think, Ian? Mr. C. Good to see you. I haven't got Pan on Fire, doesn't look like. Forex Gal. No? Anybody got any thoughts? What do you think on the on the problems that the world faces with interest rates? I mean, do you think that there's going to be a huge, debt burden, which, is going to be unsustainable if interest rates go up? Do you think the house price in London or the UK will collapse if interest rates go up? Do you think that it will be status quo? Asia's going to get hammered. Okay, well, that's a little bit out there, but yeah, fair play. So Asia's going to get hammered. Well, I mean, I think there's a lot of problems when you're the size of China, and you've kind of promised everyone can have whatever they want, and when you see such huge growth, it has to be mirrored by such huge, negative growth. And I think China is such a complex and difficult to understand, both culturally and from an economic standpoint for the West. That I think that there's going to be huge shifts in Asia, and I think people's expectations are the main thing. When you're a communist country like China, you can only make people do what you want them to do for so long, and you can only keep people so uneducated for so long. And that's the problem with Korea. That's the problem with all these kind of states that ban freedom of information. Even very kind of forward-thinking places like Dubai. They ban WhatsApp. They ban WhatsApp. And the internet and that kind of stuff. So even places that are meant to be quite West on the front of it are still very kind of backwards in the attitudes to people's freedom and what women can do and etc. etc. So. Yeah, unfortunately, I don't think that's why I don't trade in the Asian markets, because I just purely don't understand them, and I have no desire to understand them, to be honest. Can we go long the pound Japanese yen at this juncture? Well, at this juncture, guys, you can do whatever you like. I'm not your master, but let's have a look at the pound Japanese yen and see what the technicals tell us. So monthly. What can we see? Well, I'm guessing we're not a million miles away from that 50%. We're actually above the 50%. So you can see how that 50% has acted as perfect support resistance. So yeah, I mean, from a monthly perspective, longer term trading, you could say that 200 is an absolute shout out for a longer term trade. The 61.8, both a technical level and psychological level. Moving through weekly, 1, 2, 3, 4, 5, 6, 7, 8. 8 buying weeks. Yeah, well, The trouble is what you'd see, isn't it? You'll buy now expecting to get to here, and the market will come back down to the 50% at 185 and then go up. So I don't know if it's an absolute green light to buy now. Daily, yeah, still looking pretty strong, really. Again, look how this 50% has acted as a perfect pivot. So yeah, I mean, I would say that you can buy all the way up to 200. So what I would say is realistically, from where we're trading now, stop of, maybe back here at 184, just below. So, quite a big, kind of trade, 67 pips to make 90 pips. So, 1.5 risk reward. I wouldn't say, go all out and buy now, but yeah, I mean, it's looking from the higher time frames and maybe some of the fundamentals as well that, yeah, the pound's a good buy against the Japanese dollar, yeah. Uh, oh, sorry, a couple ones up. I feel like interest rates should be going up, but central banks have never been here before, so difficult to have an opinion. Yeah, exactly right. It is difficult to have an opinion. Printing money in the air, what is this mean? Well, I mean, the quantitative easing, yeah. I mean, the quantitative easing is part of everything, isn't it? The quantitative easing is out of the US now because they've printed enough money to make the economy self-sustaining. But that assets purchase facility, it's just a form of quantitative easing. In the UK, the European Union is still printing money. The Bank of Japan is printing money. Everyone's printing money like it's some answer to our prayers. But what I would say is the country that's printing the least amount of money and printing the least amount of debt is the one that's going to win, and that looks to be the US, and that's why we're seeing dollar strength coupled in with the interest rates are probably going to go up in the US before any other G7. Then that is why people are pouring into the dollar rather than any other currency. But from a technical perspective, what happened in the past is going to happen in the future. So all the selling pressure we saw in the pound and people buying the Japanese yen seems to be out. So right now, the market is telling us from a technical standpoint that we're above that 50%. That means we want to get to 200. Well, that eventually we want to test the highs. So basically what we're looking to do is find value. Is the pound in the future going to be stronger than the Japanese yen? I would say that everything's pointing to yes. So yeah, I would say, buying the pound is a good idea against most currencies. So still, again, towards the highs against the dollar. Euro's not doing a great deal. The markets in general not doing a great deal now, really. Maybe some consolidation and maybe, all that kind of fear from Greece is kind of getting priced in now. So maybe a little bit of a rally back in the FTSE, but difficult. I would say until we get some more data or we see the US Open, not a great deal's going to happen. We've got non-farm productivity, challenger jobs, unit labour costs this afternoon. Challenger jobs could be interesting in 22 minutes. Expected 61,000. Maybe, that could be a bit of a precursor to Friday's non-farm payroll. Difficult to say. But right now, what I do is expect the trend to continue. So if the FTSE doesn't bounce and, get back up and people start dip buying, then the trend is down. DAX trend is down. S&P trend is down. Gold, stay away mid-range. Euro up, pound up. Okay, so if nothing changes into the US Open, the trend should continue. Why do they say in the air? Uh, it means nothing air that does not even have air in it. Right. Well, I don't know. I think they're referring to, quantitative easing when you talk about it. It's just printing money. It's not actual. It's not real, is it? Nothing's real. When you trade the stock markets, nothing's real. You're not actually buying or selling anything. You're buying and selling movement. So when you put quantitative easing into the economy, it's not real, is it? You're not actually putting a factory there and bringing people to work. You're just providing liquidity for the banks and providing, money to be put into the system that, in theory, should prop everything up. So that's what it means. Any thoughts on the S&P? Well, the S&P again, very similar to Europe. We've seen this, huge kind of, trend line sweeping up. And I would say that, we're still pretty high. And again, unlike Europe, that's closed below the major trend line, the S&P hasn't. So the S&P could easily, after making, more record highs, in the Dow, etc., could drop another 285 points back to the trend line. So yeah, we could see Europe being dragged down by even further by the US being dragged down. So a break of 2096, break of 2092 could see the market get down to this trend line in 2076 and maybe 20. 6.2 is a big target. So yeah, I mean, maybe this is the time where the market starts to take some profit, and that profit taking generates sellers in the market. I don't know. Every time we've seen that, on the kind of weeklies, monthlies, dailies, we've quickly bought back up. But at some point, the trend has to change. You have to sell. So I would say we've got 300 points or so on the downside of the S&P, and if we close below that trend line, it's game over. Market, has to come down to these lower levels and break back below 2,000. But again, it's about being right at the right time, isn't it, guys? It's not about having the right opinion. It's about being right at the right time. So yeah, really, I guess some more profit taken in the pound. Again, I'd still, be buying the pound at these low points. And the euro, again, has to come down at some point because it's just overpriced, but the trend is up. So really, yeah, it's just a wait and see, guys. It's wait and see to see what happens in the short to midterm, I guess. Wait for that Challenger jobs and wait for the US data, wait for the US Open. So any final thoughts, guys? Anything before I wrap it up? Yeah, well, you have to get used to people talking fast in the markets, guys. It's a fast moving environment. We're not here to dawdle and kind of just lament over what can happen. What am I using FX Book for? I use my FX Book to monitor my accounts. So I have a number of accounts that I trade, live, and a number of accounts that I trade for different things. And this is my managed account. And I use that for my stats. Okay, so my kind of performance, that's what I use that for. Very good tool, my FX Book. So if you trade an MT4, I would definitely use it. Where would I buy the pound today? Well, I buy the pound down here, as I told you. I buy it really where the red line shows you, 1.53620. So I'd be buying the pound back here, or just do what I always do. Do a 50% fib. Okay, so the up move started here, so here. Just do your fib. You can do the same analysis I can. Okay, so 1.537, but I'd probably wait for it to break a little bit lower back to this level here. So I'll be averaging in around here. So anywhere between these two levels, 1.53617 and 1.53770, I'll build a position around here and expect this uptrend here to continue. So that's what I do. Okay, good stuff. Yeah, no worries, Rick. Well, thanks for your comment. Well, listen, guys, I've done a lot of webinars now, so apologies if I talk quickly, or apologies if I try and say too much. I've done 1,000 webinars, so there's only so much information and things that I can bring that are new to the markets. What I try and teach you guys is the markets will move 80% of the time technically, which is your lines, okay, and 20% of the time fundamentally, which is your news from Greece, okay, Greece not paying back the IMF loan. So figure out what that fundamental means to the market. Understand the markets will always trade between support and resistance. Figure out where value is. Where's low, where's high. And trading's all about being right at the right time. Do not fool yourself by thinking you can have an opinion in the markets. Because you can say, yeah, the pound's going to go up, and it might finish up today, but it might drop 50 points, 100 points in the meantime, and your trading strategy, your account cannot allow that. So all you're trying to do always is be right at the right time, okay? Very easy to say, very difficult to do. But you get your balance of fundamentals and technicals, understand where value is, buy into strength, sell into weakness, or look for that fundamental breakout from the midpoint around the moving average, and that's what trading is, guys. Anything else, guys, get me on Twitter at Steve Ruffley, or you can contact me through my FX Street page. Anything else that you want to know, guys, just Google me. I'm not a difficult man to find. I'm a trading non-fan payroll like everyone else tomorrow. So just Google me, figure out where I am, and come and join me. All right, guys, have a great afternoon, and I'll speak to you all soon. Take it easy.